Hello folks. So this video is for subscriber of PAM and my students who took training from us. Okay. So since we all know the PAM now give more accurate signals, right? And earlier it was giving more signals, now it gives quality signals. We eliminated majority of signals, by putting more filtration in the, coding. Now coming to the PAM new entry rules, right? Earlier, what was the entry rule? Whenever you are getting a buy arrow, you mark the high of the candle, and as soon as it gives a breakout, you enter, right? For example, here you get buy arrow, you mark the high of this candle, which is called calling candle, right? I hope all of you remember the calling candle, right? So, which is called calling candle, right? Which is called calling candle, right? So when the calling candle, high is broken, we took an entry. But we observed, right? Sometimes the stop losses are big, right? So in order to, reduce the stop loss and follow the money management, we are now going to give you the new rule. This new rule is back tested on all crypto market, the altcoins which we are trading, all, the bigger coins like BTC and all, right? Apart from that, all commodity market, all index, all stocks, we did, our software testing, and finally we concluded this approach have more accuracy, more, winning rate. And obviously here stop losses, number of drawdown, which we call the drawdown concept. Actually we were working on the drawdown from a long time, so this drawdown will be low for your account. Okay, so let's try to understand. Initially, when you are getting a buy arrow, what you are doing, you are marking the high of the candle, and when the high of the candle is broken, first breakout happens, you take an entry, and this is your stop loss that time. Now, let me tell you one thing. If market has to go up, definitely it will go up, right? And since it has to go up, it will make higher lows, right? So my concept is, if when it's giving a first breakout, definitely if it has to go up, it will come back to create a higher low. This higher low, if I will put my stop loss, so my stop loss will be low. Obviously, if I'm entering here and this is my stop loss, this time if I'm entering here, this will be my stop loss. And also it's a double confirmation, market is again going back after making a higher low, right? Here what happens, sometime it goes up and it come back like boom, this, and you are stopped out, and it continuously goes down, right? So that's why we are taking double confirmation. So what you have to do, when market gives a buy arrow, you have to wait, mark the high of the candle, and let market give a breakout from the first high. This high is called calling candle, right? So market will give a breakout from this horizontal line which we'll draw on the calling candle. Wait, market will again come back and go inside this horizontal line, then again it will give a re-breakout, second breakout, you enter, and this swing, the newer swing, will be your stop loss. This approach will reduce your stop loss, and you will get more risk to reward. Sometime it might happen, it will break and it will never come back. It's okay, leave the trade. And in that case, when it will never come back, situations are also, there are some situations. So I will also tell you in what situations it might not never come back. You will not get a re-breakout. The market will continuously go up. I will cover it for you. Don't worry. Okay. Now, I hope this point is clear. Let me make you understand this point somewhere here. For example, any signal. See, here you got one signal, this one, just this candle, right? So this is a calling candle. So we just mark high of the calling candle where you are getting the call. Now market given a breakout, you see, this is a calling candle. Calling candle, after calling candle, market came down, given a breakout of this calling candle. Earlier we used to take entry here on the first breakout. This this number one breakout, we take an entry, and this is your calling candle. Let's assume this is your calling candle. So we used to take entry here, now we will not take entry here. Second breakout, when this breakout will occur, we will take entry, and this will be your stop loss. And this stop loss is much more better stop loss than other trades. See, you see the market again went in your direction, and see, boom, you get a big profit. right? So 13%, obviously catching 13% is not that easy. You do not have passions, especially in futures. But yes, this is how you can see that move. Okay, one. This is one point. Let me delete that. I will show you in somewhere else. Let me go to silver M. Okay, I will show you here. Anywhere you start, I will show. See, for example, here you got a sale call. This candle, you got a sale call. For example, now you see this is your calling candle. This is your calling candle. This candle is calling candle. Okay. Now here is the first breakdown happens. Okay, so you have to wait. See, earlier we used to take entry here, and this used to be our stop loss, right? Big stop loss. This is a step, means earlier stop loss. Now what we are doing, second breakdown here. Now this will be your stop loss. This second breakdown, there we are going to take an entry. Now if you plan your risk reward, if you plan your risk reward at this place, see, you got easy 1:1, right? So if you are seeing, right, this risk reward, right, means you see this entry is more better entry. So I will show you more. See, for example, this one here, right, this place. Okay, this place. Now this is the first breakout. It came back. This is a calling candle somewhere. This one is the calling candle. It came back, it given a first breakout. Now you see that I was talking about, it never came back. It never came back. It directly goes up, 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 and see, here it's coming back, but before it's coming back, it's already following a sale signal. So see, it never came back. Simple. Here it given a first time breakout, but it never came back. So when it will never come back, that situation I will also cover, but this was one of them. That situation was one of them. I will show you some more signals here. This is one. Okay, this one is the calling candle, and you see the market given a breakout from here, means, one second, this is a calling candle. Market, given a breakout, first breakout, not entry, came back, re-breakout, second breakout. This will be a stop loss. If you take an entry here, your stop loss was going to be somewhere here. But when you take an entry on the second stop loss, when the re-breakout, your while taking an entry on re-breakout, the stop loss is low and profits are big, right? The game is of risk reward, so decreasing the risk, we can't increase the reward, right? It's not possible by anyone, but we can decrease the risk. Obviously, when the PAM gives a signal, chances are very high the market will react in that direction, but still we have to focus on our risk. Let me show you some more here. See, this is a calling candle. This big candle is a calling candle. Now you see, it's a calling candle. It's given a first breakout at this place. I will wait. Came back, boom, second breakout. If I will enter on this breakout, this was my earlier SL, right? But when I will enter now, this will be my earlier SL, right? This will be my new SL. And when you enter with this SL, you see the move. This is bigger move, right? Let me delete that. Okay. So I hope point is clear. For example, here you got one signal. This, which candle? This candle somewhere. This is your calling candle. Now you see it went down. Obviously there is no proper breakout, but earlier this was a first breakout. We are not entering on any first breakout. What we are doing, first breakout came back, then second breakout we are entering. So see, there you don't need to enter, right? You get easily out of the signal. I hope this point is clear to all of you. Okay, so this is the general rule which we will follow, uh, you know from now onwards while taking an entry. I hope This point I made clear to all of you.